Hello, and welcome to Quant Matters, where we talk about the quantitative approach to investing and finance. Today, we're going to look at historical prices, what they are, where to get them, and some of the earliest ways they are used in quantitative analysis. By the end of this video, you will have built a simple dashboard for the S&P 500 components that you can use as a foundation for your own strategies and investments. Before we start, I want to mention that the channel now has a Patreon page. There, you can download the finished code from this episode, along with an expanding PDF that collects the materials covered on the channel. It is designed as a reference, especially if you prefer reading or want something to revisit later. That's it. While the code on Patreon can save you time, everything shown here can also be built from scratch by following the steps in this video. Prices represent the value of an asset at a given moment in time, and they are one of the most critical pieces of information in quantitative finance. We use prices to track performance, compare assets, and derive other metrics. You can think of them as the raw materials out of which strategies and portfolios are built. While this sounds simple in theory, there are a few important details and a few gotchas we need to address before moving forward. You might think there's a single historical price, but in practice each asset has several different prices, each capturing a different aspect of its trading behavior. Open, the price at which the asset first traded when the market opened. High, the highest price reached during the trading period. Low, the lowest price reached during the trading period. Close, the final traded price when the market closed. Adjusted close, the closing price adjusts for corporate actions like dividends and stock splits, making it more suitable for historical analysis and return calculations. There are several ways to get historical price data, depending on your needs and the scale of your work. At the simplest level, you can use free tools like Google Sheets. We looked at this in the Portfolio Basics episode, and for many personal portfolios or exploratory analysis, this is more than enough. The next option is fetching price data programmatically and in bulk. Free data providers exist, but they often come with limitations, rate limits, incomplete coverage, or inconsistent availability. They can also change or disappear without little notice. For this dashboard, we'll use Yahoo Finance. It's not perfect, but it has remained free, widely accessible, and reasonably reliable for daily historical data for well over a decade. If you already use a broker or trading platform, it's also worth checking whether they provide an API for historical prices, sometimes at no additional cost. Finally, you can pay for market data. Entry-level plans might start at around $20 per month, while institutional-grade datasets can cost hundreds of thousands of dollars per year, depending on coverage, depth, and licensing. A small but critical decision when working with historical data is choosing which price and which frequency to use. For most quantitative work, daily adjusted closing prices are the most convenient starting point. They are stable, widely available, and already account for dividends and stock splits. Intraday data, such as hourly or second-by-second prices, is usually associated with high-frequency or execution-focused strategies. While these approaches are quantitative, they are not the focus here. Intraday data is also more expensive and requires more complex infrastructure, which significantly increases system complexity. Big picture, we want to set up a database to store pricing information, request historical prices from Yahoo Finance, and store them for performance analysis. This stage is usually called ingestion. It can be divided into an initial and often lengthy download, followed by smaller updates as new data becomes available. Once prices are stored locally, we can select a date range and calculate performance for each asset. What you use to build this dashboard is entirely up to you. My chosen stack is based on years of building quick prototypes that can scale and run on modest hardware. Here's what I'm using. PostgreSQL as the database, with pgadmin for troubleshooting, Python as the backend language, Flask to handle ingestion and financial logic, and a lightweight HTML frontend with a bit of JavaScript. Everything was written and runs in VS Code with help from Copilot. There is a private repository for the dashboard available through Patreon, which includes detailed instructions and the finished app. That said, I'll go over some common issues you should be aware of, whether you use my code or build everything from scratch. You'll need at least two tables. One stores asset metadata, tickers, company names, asset type, and exchange. The other stores price data. These tables should reference each other using an ID. It's a good idea to add a query early on that describes your database structure. This helps you understand what's stored where and makes future expansion easier. Before ingesting prices, you need tickers in your database. For this dashboard, we use the S&P 500 components, roughly 500 tickers. You can source this list from Wikipedia or use the ticker registry included in the dashboard repository. Once your ticker table is ready, you can start ingesting prices. Consult your data provider for specifics. In Yahoo Finance Python interface, for instance, you might request daily data like this. It is important to throttle your requests, especially when downloading large amounts of data. If you don't, you risk getting rate limited or banned. Expect the initial ingestion to take some time. I also added an option to truncate the price table in case you ever need to re-ingest everything from scratch. It is a good idea to include a coverage view that shows which assets you have data for, along with their available date range. This helps avoid mistakes later when calculating performance. The final step is calculating performance. Here we use adjusted close prices to compute total return as a percentage over the selected date range. Another recommendation is to double-check your final return numbers. Use another provider like Google Finance or Apple Stocks to see if there are any major discrepancies. Whether you use my dashboard or build your own from scratch, after ingesting your assets, you should have a dashboard similar to this. Beyond learning how historical prices work and how to build a basic quant dashboard, you can already use this tool in practical ways. Most investment ideas come from stories, news, social media, or recommendations. Historical prices let you quickly see whether the market has actually rewarded those ideas. Short-term price moves often feel dramatic. By switching between time windows, you can see whether a move is exceptional or just normal volatility. Even without advanced metrics, comparing returns across similar companies helps identify leaders, laggards, and dispersion, a core quantitative skill. Having a local database of prices and assets is the starting point for most quantitative research and systematic investing. From here, you can add metrics like volatility or alpha, backtest investment ideas, expand into other asset classes, or use historical prices as inputs for forecasting models. Consider this dashboard not as an endpoint, but as a foundation. I hope this overview of historical prices and building a simple dashboard helps you in your investing journey. Thanks for watching, and if you want more quantitative content, please consider subscribing to Quant Matters.